This video is brought to you by Narwhal, an advanced cleaning robot that lets you stay competitive with your time.
Melinda Gates have filed for divorce, ending what some consider one of the most consequential marriages in American history, each tweeting a joint statement saying, "After a great deal of thought and a lot of work on our relationship, we have made the decision to end our marriage."
After 27 years, the former world's richest man is ending his marriage with his wife, sending shockwaves to the world. The high-profile divorce invites the public to speculate what will happen to his massive fortune.
You know what I love about Bill Gates?
Probably
love that he has so much money that even if she cuts him in half, he's still got 15 billion.
Yeah.
Ever since Gates' retirement, he has been diversifying his fortune. The person responsible for protecting and growing this great wealth is an investor little known to the public, Michael Larson. The fortune Bill Gates had before the divorce was bigger than even the top hedge funds on Wall Street. Managing Bill Gates' wealth isn't just a full-time job for one investor. It's a full-time job for an entire investment team. Since Larson took over Gates' portfolio in 1994, he has reportedly generated a return of 11% a year, slightly better than that of the S&P 500. And that's not counting the incredible growth of Microsoft stocks. 11% might not seem much to certain people, but Larson's portfolio has much lower volatility, essentially outperforming majority of other endowments out there. Michael Larson is a mysterious figure. For years, he's been using a particular strategy designed for the world's richest man.
Phineas.
Born in a wealthy and well-connected family, Bill Gates is set for a great life, as long as he follows his father's footsteps by becoming a lawyer. But to the young Bill Gates, he wants something different, something exciting, and it will require him to take huge risks. Since he was a teenager, Gates has always been fascinated by computer software, an industry still in its infancy. But Gates thinks he can do better. Just like how Henry Ford ushered the age of automobiles, Bill Gates envisioned himself as the man who puts a computer with his software installed in every household. So he drops out of the pre-law program at Harvard and goes all in to create his own operating system. Gates understands the risk is worth it because he can always come back to Harvard, and his family will always give him a safety net. Bill Gates' first product, MS-DOS, is an instant success.
When they developed that operating system for IBM wanted to buy the source code, which would have given them the disk operating system, or what became known as DOS, and instead Microsoft refused to actually sign the rights over to DOS.
Bill Gates' business model is brilliant. IBM would now have to pay Microsoft a licensing fee for every single copy of DOS installed in its computers. But his biggest breakthrough comes when his company Microsoft releases the Windows operating system on November 20th, 1985.
There were all kinds of computers that were being conceived at that point in time. And it struck me, I don't know who will win in the hardware business, but Microsoft has a very good chance to win in the software.
By the early 1990s, Microsoft has virtually become a monopoly in the business of operating systems. As the founder, Bill Gates owns 45% of the company, making him one of the youngest billionaires in the world. His wealth came to him so fast, and also at such a young age, he didn't know what to do with them. Not knowing much about finance, Gates hires a friend of his to manage his money, Andrew Evans. But that is a mistake. Working as a full-time CEO at Microsoft, Bill Gates is not involved with his own personal finance. And as his wealth grows, people around him take notice. Andrew Evans has been a longtime friend of Bill Gates. He has been keeping an eye on Gates' ever-growing fortune. He realizes Bill Gates may be a genius programmer, but he knows little about finance. He could manage Gates' new fortune and make himself rich in the process. Persuaded by Evans, Bill Gates hires him to invest his money. And as a friend, Bill Gates gives Andrew Evans full autonomy over his money. It turns out Andrew Evans and his wife were felons who years earlier were charged with bank fraud. The decision to hire Andrew Evans backfires on Bill Gates. The Wall Street Journal published an article exposing the secret past of Andrew Evans. The damage to Bill Gates' reputation is massive. You know, Bill Gates was young and kind of arrogant, so he didn't listen to what the press had to say about him. And he wanted to keep Evans around. But there's one person Bill Gates will always listen to: his mother, Mary Maxwell Gates. She has been a powerful businesswoman in Seattle, sitting on the board of many banking companies.
That ability to be a good board member then got her other positions on boards that paid.
She has been instrumental in helping her son's business. She knows keeping Andrew Evans around is a ticking time bomb. She instructs Gates to find a new money manager. And this time, Bill Gates must do a full due diligence process, a practice common in her own finance industry. To not disappoint his mother, Bill Gates now devotes his uttermost attention to finding a great money manager. He's looking for a man he trusts completely in order to stay focused on Microsoft. And Bill Gates recognizes that a primary goal should be wealth protection, rather than seeking great returns. Gates builds a task force of headhunters with the ability to do background check like the FBI. And like writing an operating system, Bill Gates will not allow any mistake this time. And soon, his headhunters come back with one unusual candidate. Michael Larson is a young up-and-comer on Wall Street, but has already built a great track record. He has a conservative investing style, often keeping half his portfolio in cash, and yet still outperforming the market. He specializes in bond funds, a skill that could help hedge the volatility of the Microsoft stocks that Bill Gates owns. That's all good, but what Bill Gates cared about the most was that this guy must not turn out to be a crook, just like his pal. But Bill Gates finds out that this guy's record is almost too clean. He never broke the law, not even getting a parking ticket. Michael Larson is in his early 30s at the time, and like Bill Gates, is already an overachiever. In many ways, Larson is similar to Bill Gates, but from a different background. Michael Larson is raised in North Dakota to a family of industrial engineers.
What do you think of when you think of North Dakota? Cold, winter, small communities, family lifestyle, agriculture, ancestors who made one-way trips from the old world to the new world.
From an early age, Larson exhibits an above-average intelligence, allowing him to skip grades and finish high school 2 years ahead of other students. And like many young people from North Dakota, the 16-year-old Larson is desperate to get out of there. So he applies to become a Coast Guard. But to his disappointment, he is too young to be qualified. He now must rethink about his future careers, and eventually decides to pursue a degree in economics. He goes to Claremont McKenna College and finishes it in 3 years. He's then accepted by the University of Chicago to pursue an MBA degree. While most students of his age still have yet to graduate college, he earns his master's degree from one of the best business schools in America. Larson's first job is working for the finance department at Oracle. The 1980s is a booming decade for mergers and acquisitions. At Oracle, Larson works on the financing for Oracle's potential deals. For big firms to acquire a company, a lot of them typically borrow money from the banks or issue a lot of bonds to raise money. It's a great training ground to learn how to evaluate companies, and more importantly, to learn how the bond market works. But Michael Larson quickly realizes, with his knowledge about the bond market, he could make more money if he runs a bond portfolio himself. He lands a job at Putnam Investment, managing a collection of bond funds. This is still the junk bond era, so a lot of bond portfolios can't do as well as equity portfolios. And unsurprisingly, after 2 years, his portfolio outperforms the benchmark. While just turning 30, Michael Larson has been in the business longer than his peers, and also has built a track record better than most. He decides it's about time to strike out on his own. And just as he's looking to raise more money, America's youngest billionaire comes calling. By 1993, Bill Gates has capitalized on the rise of Microsoft stocks. And to diversify his wealth, he sold $400 million worth of shares. He hires the 33-year-old money manager, Michael Larson, and gives him all of that money to manage. It's a huge display of trust. Michael Larson has his own set of investment theories and principles. He had to explain portfolio optimization in math terms. And mathematical certainty is something that Bill Gates can trust. By 1994, Michael Larson starts the fund, Cascade, with only one investor on board, Bill Gates. To make one investor happy is truly easier than to make more, right? Larson is about to find out. Making Bill Gates happy is no easy task. After becoming the richest man in the world for many years, Bill Gates realizes that there's one commodity that is more valuable than money: time.
He is on time, to the minute, every single meeting without fail. Time is the one commodity that he can't buy more of.
So Gates decides to not only have Michael Larson handle his finances, but also starts automating his own home. The key factor of success for both Bill Gates and Warren Buffett is focus. Narwhal T10 is one of the most innovative cleaning robots that is quiet, autonomous, and more importantly, it frees you from repetitive tasks so that you can stay focused on the competitive game of finance. I've been using Narwhal T10 for a while now, and unlike other vacuum robots I got, this one's really great at navigating and efficiently cleaning and mopping my apartment all on its own. What really sold me on this cleaning robot is that it mops my kitchen floor really well, and it automatically cleans itself afterwards. And it really saves me a lot of time and gives me a clean space to wake up to every morning. To get a discount, use the link in the description. Larson's first task is to figure out how to hedge the risk associated with Bill Gates' Microsoft stocks. It's a very unique situation. Michael Larson has little control over Bill Gates' ownership of Microsoft stocks because Gates has to have enough shares in order to have a controlling position at the company. And they also can't trade Microsoft stocks actively, which could easily look like insider trading. All he can do is to design a strategy around Microsoft stocks in order to retain the returns, hopefully, and also reduce overall volatility. It's a daunting task, one that requires Larson to rethink everything he's learned about investing. And when you made a deal with the richest man in America, who is famous for his violent temper, failure is not an option.
Millions of shoppers across the country are rushing into stores on the hunt for big bargains this holiday season.
The mid-1990s is the height of the technology boom. Overnight success stories are constantly on the front page of the American media, attracting thousands of young people into Silicon Valley. Bill Gates is the personification of the kind of wealth that is possible in tech. But he knows his fortune is too volatile because of his Microsoft stocks. He needs to find an investor that can not only safeguard his wealth, but can also grow it better than others. It's a difficult task given to the young Wall Street money manager, Michael Larson. As an expert in bond investment, Larson needs to come out with a new strategy. In In order to diversify the risk away from Microsoft stocks, Larson believes he must put the rest of the wealth in assets with a low correlation to stocks, especially to tech stocks. He decided to invest 70% into a mixture of short-term government and corporate bonds, plus some high-yield bonds in the emerging market. It's a textbook solution, which might stabilize your portfolio, but it doesn't guarantee any great returns. The real breakthrough comes when Larson realizes that to hedge against the volatility of the stocks, he should get off from the public market and allocate 30% of the portfolio to private equity deals.
I generally am somewhat skeptical of the entire IPO process. I tend to think it creates exorbitant amounts of costs. It creates a lot of distraction for management teams, and the track record, even today, if you think of some of like the most iconic, interesting companies of like the last year and a half that have gone public, by and large, it's been a very mixed track record. Whereas you see a bunch of other great companies who choose to take alternative forms of financing, and it's going really well.
The combination of private equity investment and a bond portfolio will allow Larson to capture the excess returns while also hedging against macroeconomic impact. And now, Larson's ready to put Bill Gates' money to the test. Over the next 4 years, Bill Gates strategically sells up to $5 billion in Microsoft stocks while still maintaining his controlling position at the company. He gives all of that to Michael Larson to manage. Larson sees the US economy in 1995 heading for a potential tech bubble. He puts $3.5 billion into US and foreign bonds, anticipating a market correction. He invests the other $1.5 billion into smaller private companies. The private equity part of the investment is very diversified, including a satellite startup, hedge funds, and some financial companies. The goal is to capture the returns of equities while also avoiding the day-to-day volatility of the stock market. By 1998, he has outperformed the Dow Jones and is well positioned for an economic recession. In the meantime, Bill Gates decided to let him take over his foundation's money. By 1999, Bill Gates has two main foundations, one with $5 billion, the other one with $1.5 billion. Unlike a typical investment fund, foundations or endowments have a unique set of constraints.
High up in a tower in Midtown Manhattan are the offices of an unique organization, devoted primarily not to making money, but to giving it away. Why?
The economy goes bad, the alumni stop giving, the government grants dry up. That's the best argument for endowments. They're a buffer for the operating budget.
The foundations have a yearly budget, and they must be very liquid, so private equity investment is out of the question. To Larson, the margin for error is thin, because any money he loses from now on is the money that can be used to help the people in need, saving lives. Once again, he must come up with a different strategy from Gates' personal portfolio. At the time, Learning Foundation has a $1.5 billion, money used to enable education around the world. It's the kind of money Larson can't risk losing. So he creates a mixture of short-term government and corporate fixed income securities. Larson will actively rebalance the portfolio based on his macroeconomic views at any given time. With this portfolio, Larson is taking a very conservative approach. He's almost guaranteed to never lose money, and he's also very liquid. The second foundation, the William H. Gates Foundation, has $5 billion. Larson decides to create his own version of the risk parity portfolio. With 60% in short-term bonds, he gives 15% to other bond funds like PIMCO. He then trades the rest of the 25% actively with different corporate or foreign bonds when he sees fit. To Bill Gates, Larson's investment strategy works. During the periods of the dot-com bubble, his fund manages to achieve a positive return, while the Nasdaq drops in half. For early 2000, due to the anti-monopoly probe, Microsoft stocks lost 34% in 5 years. But because of Michael Larson, Bill Gates' overall fortune has been barely affected by the decline of Microsoft stocks at the time. His strategy seems fixed, but Larson is not a dogmatic person. As a macro guy, he knows how to ride a bull market when he sees it. Used to be a fixed income manager, but Larson realizes after the decade of 1990s, the bond market has changed.
What we see here is this 26-week rolling correlation of the S&P 500 to interest rates. And you can see that currently, at least the last 10 years or so, the correlation has been quite positive, where back from the 70s up until the late 1990s, it was negative.
Now Larson must start buying more equities, except they have to have a low correlation to Microsoft. He learns from Gates' best friend, Warren Buffett. He invests a portion of Gates' portfolio in various value stocks for the long term, including Berkshire Hathaway. By 2021, Bill Gates' overall fortune has climbed to $140 billion. But little does Larson know, his life and his relationship with Bill Gates is about to be flipped upside down.
Bill and Melinda Gates are joining a number of other wealthy couples splitting up after decades-long marriages. Theirs is reportedly an amicable one, but it will be costly.
Their surprising divorce makes the future of their foundations uncertain. It also creates uncertainty about Bill Gates' fortune. While the divorce will not make Bill Gates a poor man, it sends him further away from the list of the world's richest people. But losing money is the least of Bill Gates' concerns. Gates has spent decades rebuilding his reputation, but after the divorce, all of the efforts seemingly have gone to waste.
The New York Times and Wall Street Journal reporting Bill Gates allegedly pursued relationships with several employees prior to his wife of 27 years filing for divorce. According to the Journal, Bill reportedly engaged in a years-long sexual relationship with a Microsoft engineer that began in 2000. The employee writing a letter about it, which came to the board's attention in 2019, leading to an investigation. Gates effectively forced from his role on the board in March 2020.
Michael Larson is caught right in the middle. Under the direction of Melinda Gates, he has been slowly transferring some equity stake worth $3 billion from Bill Gates to her.
That's very
Sorry. She received $851 million worth of shares in farm equipment maker Deere & Co. According to SEC filings, she also received $2.4 billion worth of stock in 4 other companies: Canadian National Railway, car dealership group AutoNation, Mexican Coke bottler Coca-Cola FEMSA, and Mexican broadcaster Grupo Televisa.
Larson is eagerly waiting for the day their divorce is settled so that he can get back to normal and manage the money that is left. But his own crisis has just begun. Since Bill Gates' reputation is ruined, Michael Larson, by association, has been under more exposure and scrutiny. Used to have a spotless record with the law, Larson now is accused of being a closet racist, among many other inappropriate workplace behaviors. But Larson couldn't care less. He only has one investor, Bill Gates. So the public scrutiny doesn't mean much to him unless Bill Gates fires him. At this point, it's a greater risk for Bill Gates' wealth to fire him after 20 plus years and trying to find a new guy. But Bill Gates and Larson are in the same boat. In spite of the damages to their reputation, in the long run, one thing is certain: they will continue to get wealthier. I want to thank Narwhal for sponsoring this video and for this great little guide, and I highly recommend it. It's going to be a great investment for your time and money.